Hello traders, today is the 2nd of June. My name is Neville Hornsey and today I'll be doing a walk through the trading platform. Okay, before we actually get into the trading platform, we look to the left, the UK 100 is grayed out. That means we can't trade it, and that's because the current UK market is closed because we're on bank holiday today and tomorrow. Chinese are also on bank holiday today, as are the Italians in Europe. So, a bit of a slower start for me in the London session. So I thought I'd take the opportunity to just go through this active trader trading platform. Now, if we go to the left-hand side, we've got all of these sort of menu items here. We look on our account information, you can see that I always trade on a demo. It's just an expression of how I see the markets. And if you place a trade, you can sort of monitor whether or not your idea is working out or not. So demo accounts, we took the account so far to £25,159. If we click on the little arrow at the bottom and we sort of go to history, we can see that on the 18th of April, 2022, we deposited £20,000 into this demo account. So, by the end of May, we had basically made 25% on that equity. So that meant my trading ideas this month just gone were actually quite good. What I'm going to do now is I'm going to sort of create a new trading account, a new demo account, so we can sort of monitor whether or not the next month or so's trading ideas are working out. So we go to the left-hand side again, and we go to our personal area. That takes us to our current accounts. If we go down here, scroll down, we can open up a new demo account. We can choose Active Trader again, because I like using that platform. There is an option to use MetaTrader 4 and MetaTrader 5. You can choose your deposit. This time, rather than going for 20,000, I'm going to go with 10,000. And leverage wise, retail traders are basically asked to trade lower leverage now. Even if you're a great trader, you're probably more likely to use lower leverage than this higher leverage. If you go to 1 to 400, it does mean that you can trade as if you've got 400 times as much in your account, but that also means that you're more likely to lose your money, well, at least 4 times faster. If we look into the left, Forex and Cfds is what I normally trade, like if I open up a live account. So you essentially want to make this demo account as close to a real account environment as possible. And you'll get to learn about the fees and then, things like swap and stuff like that. All right, so we can click on Open Demo Account. It says your account was created successfully, and we can click on Trade. Now, do we want notifications? Not personally. When I'm doing these videos, I like to keep all the notifications off. All right, so here you can see how the actual trading platform sets up. We've got 10,000 in the balance, 10,000 in the equity. You can see here, if I click on history, there's absolutely zero history apart from the deposit. So this is essentially a clean demo account and a clean chart. So for our sort of strategy going forwards, we're going to do an end of day strategy. So we're going to use the daily time frame. I'm going to use the Bollinger Band. So if I click on indicators, type in Bollinger, and here you go, you've got Bollinger Bands. If I go to here, got the cog, I'm going to change the style of this. So we've got length 20 multiplied by 2. So that's good. Style, we're going to get rid of the median line, get rid of the upper and lower. And then we're going to plot the background blue as it is, but I'm going to sort of lift the opacity. So this gives me that sort of background Bollinger Band without any lines that sort of pass through. So here you go. That's the Bollinger Band setup. Then I'm going to hit indicators again and hit EMA. So moving average exponential. I hit that twice. And you look to the left-hand side, we've got 9, which is good. I'm going to make that white like we did last time. Just click OK. And if we click on the cog again, go to yellow, and also I'm going to make it a little bit thicker. And then inputs wise, I'm going to turn that to 200. So that's looking back over the last 200 periods. All right, so that's essentially all we need really for the chart. We don't need volume for this strategy. Okay, now that we've got the indicators set up on our end of day charts, we can see that we've got moving averages moving to the downside, showing that momentum to the downside. So that sort of gives us a quick visual of the current trend. The trend is our filter essentially. So whilst price action is below the 200 period moving average and the 9 period moving average is below the 200 period moving average, that is our filter. That means we can start to look for shorts. So the filter is, as I wrote here, 9 EMA below the 200, price action below the 200. Then we're looking for our setup. So the setup is when we get a close back above the Bollinger Band upper bound here, whilst the filter is for the downside. So this candle here is our setup. And then the trigger is when we get a close back below the 9-period moving average. So this candle here on the 29th of October 2021, on that close, this was the trigger, which meant at the end of the day, we could then set a short for either a break of the low of this candle or just at the next candle's open. Now with this strategy, we're going to use a risk to reward ratio of 1 to 2. So if you take a break of the low of the trigger candle, then that's where you're looking to get a short. Your stop is when your trade idea is mitigated. So you put, to sort of keep risk within reasonable bounds, we're going to put it above the previous swing high, which was obviously the day before. And then we're looking for a profit ratio of 1 to 2. So if we just drag this down to there you can see that on this euro versus US dollar, around the end of October into early November, we had a risk to reward ratio of 1 to 2, and then we actually hit our target towards the end of November. So that is the actual setup and strategy that we're going to use going forwards. It's just going to be on the daily charts. You can obviously then use this as directional bias. So if you're looking on the daily, if you would prefer to use intraday charts, you could then go to your M30 maybe and use exactly the same strategy, but only in line with the higher timeframes. All right, but we're going to keep to the higher time frame, the daily. So if we were to go to current day, we can see that here we've got a close back above the Bollinger Band. We had the price action and momentum is below the 200-period moving average. We had yesterday a trigger to go short. So I'm actually going to create a sell now. So if we go here, click on the red there. So that's setting up for a sell. Now I'm going to use 0.1 lots per 10,000. So if I was to trade over multiple charts today, I would have to reduce this 0.1 lot into whatever fraction I need. So if I was to trade over say 2 charts, I'd then change this to 0.05 and then do that twice to make up for the 0.1. So my lot size should never really go above 0.1 as a whole. So I'm only going to trade the euro versus US dollar today. Got 0.01 here, and then I can hit sell right now. So there you go. Put in a sell order. The trigger was obviously this day. What I've seen here is a move back up in here, which means my risk to reward ratio now, when I place the stop above the swing high, is actually going to be smaller than if I had placed a sell stop below this candle. So that was my reason for going short right now. All right, so obviously we need to take a stop loss and profit. So if you were to use the magnet, and then if you come here, you can see here we've got price labels, and you can just click on that one. So 1.07866 is where I'm going to place my stop. Double click on there, put in this level here. So 1.07866. Then you get the opportunity to modify. You can modify position, and there you can see we've got a stop loss here now of 0.1 at 1.07866. Now, obviously, price can keep going higher, and there is a chance that the spreads widen in an overnight session. So what you want to do is then just sort of push that a little bit higher and just sort of mitigate for spreads. If you look to the left, we can see that this candle high here reacted to this level here. So essentially, we could see a push higher, and as long as we don't get back above this high from the 25th of April, I think we'd be safe, assuming that we take into account all the spreads and stuff. All right, now we want to set up our profit target. For that, we can go to the left-hand side here, hit short position, and we can say, well, this is where we got in. This is where our risk is, and then we want a risk reward of 1 to 2. So there you go. So now we can add that in as well. So for this time, I'll just use another tool. We've got price note. All right, so 1.04383 is the potential profit target. When we look to the left, we've actually got sort of an imbalance here. So if I was to sort of drag that down and then use the tip there, you can see, we could maybe push a little bit lower to test the high from this 13th of May. If I just pull that down. So now our risk reward ratio is greater than 1 to 2. And I'm going to sort of put in the profit target now. So you can see down here, it's 1.04192. So 1.04192, modify position. So that's now our take profit target as well. So essentially what I'm looking for is this correction to have sort of stalled out now. We're looking to the left. We had this area of support now acting as resistance. We had this swing high here. We had the setup. We're obviously in a downtrend, so we're looking for this to continue going lower. Now, what we do have to worry about is obviously this imbalance here. So we had the 23rd of May push up, and then we left this swing high here. So there is potential that this level acts as support, and then we get reversal off that. We've also got this level here, which was a swing high. So there was stops up there, and that's when we saw this accelerate through. Obviously, if there were sellers there and they flipped now to being buyers, then they could have just sort of reverted now, maybe sucked up and sort of taken a bit of heat, and then on a sort of retest, they might have flipped to being buyers. So we could be seeing this go higher based on this area here. However, the algos generally don't like to leave gaps. So, if we look below, we have got this gap here between the 16th of May high and the low of the 18th. So again, that's good for us because, that'll be nearer to our risk reward of 1 to 2. And then ultimately, we're just looking to sort of get out as near to the bottom of this swing low as possible, because that's where a lot of traders will be. Now, if I just double click on any of these on the chart levels, we can see that stop loss is -100 spot 56 pounds, and the profit target is 217. So within the actual ratio of what I'm looking at, that's 1% essentially. Risking 1% to 2% is good, so hence why I'm quite comfortable to put this trade on. So that's the strategy. Obviously, we could fail at the first attempt, but as long as we keep taking the signals as they arise, we should, based on the previous month's sort of equity rise, we should sort of see some profits by the end of the month. In terms of the assets I want to trade, come here, we've got Forex, we've got all these different watch lists, so we could go straight into indices, we could go into commodities, and we could go into futures. So essentially, you could either have a really long list that you create yourself. So you can go to my list and you can put your watch list is currently empty. So you'll need to add some instruments, click on the arrow, hit the majors. If we want to trade all the majors, look into the minors. I don't generally like to trade a commodity against the commodity. So we don't really trade Aussie CAD. I do like to trade risk on, risk off. So if the market's going risk on, then we want to see the Australian dollar go higher and the yen go lower. So that's always good. Australian dollar, New Zealand dollar, it's interesting to sort of see, but essentially I don't trade it. Aussie US dollar, I like to trade. Euro versus the Aussie, I like to trade. Same with the Euro New Zealand, pound Aussie, pound Kiwi. This is two commodities, so I don't like to trade that. And that's very illiquid, so the spreads are really high, so I don't trade New Zealand dollar versus the yen. New Zealand dollar versus US dollar, I do. So they're pretty much all of the minors that I like to trade. In the indices, go to cash indices. I like to monitor the German DAX, UK 100, S&P 500, Dow Jones, Russell, and NASDAQ. And with commodities, I basically just watch Brent and gold. Okay, so that's all of our assets that we are going to trade over the next month or so. You can see that they're not in alphabetical order, so I'm going to sort of just quickly put those into alphabetical order right now. And so when they're in alphabetical order, it's just easier to sort of scroll through like the Aussies and then the Euros and then the pounds, and you get an idea of when you come up here, click on the sentiment indicator, you can see quite quickly if the Australian dollar is doing quite well against other pairs or not. Same for the pound. You can see here that a lot of traders are trying to go long the pound versus the commodity pairs. All right, so there are the assets we're going to use. Like I said, if you click up here, you've got sentiment indicator. Click here on the arrow, you can collapse that so you've got a bigger view. So that's it. That's the active trader platform set up. This is our first trade, which currently is in profit, so that's good. These are the indicators that I'll be using going forward. And yeah, this is how I'm going to set up my active trader platform. We're starting with a £10,000 equity. Let's see if we can actually get that balance at the end of the month up. All right, good luck this week, and I'll speak to you again tomorrow.